All right, folks, trusted doing good, guys. I'm optimist. So, quick one. I want to show you a trade breakdown here. I started by posting it yesterday on my free channel. Yeah, yesterday on my free channel. This was it. When price was here, I gave them the price action. That price is most likely going to come back into this range, and then we are going to have a pull to the downside. And this was it. And then the overall setup looked like this at some point, but I'm going to show you the re-entry I got here and this quick exit. Now, this exit was based off how this key level was created as I think Friday. Yes, it should be Friday. No, Monday. That's Mondays. This Friday. So how we had this liquidity run at a key level and how we moved to the upside. So I knew something could be up, and besides it's Tuesday, so a lot could happen. So let's start with the breakdown. So the first thing I want us to do is just to understand what was happening on our time frame. So before we woke up in the morning, there was a form of price action that happened. I up here, look at it. So this was Monday. We had this run above previous daily high, and then look at the way we closed. And then this was Tuesday's 3 a.m. candle. So let's do 2 hours so that you can see what I'm trying to show you. So this was the liquidity run, and you can see this is the shift in market structure, quite all right. And one thing you should know about me and every of my trade, I've said it a lot of time, is that I trade fair value gaps. The way we reject that fair value gap, and this is the basis of auction market theory. So even though I create a reason why I expect something, maybe directional bias, for example, this liquidity run and this quick shift is the reason why I was anticipating a bearish sell in New York. Now, I want you to understand I literally trade New York session. Sometimes it can be London, but it's usually the London kill zone into the New York. And sometimes it can be the Asian session, but it's usually Fridays. So it's just me understanding the game plan and the pattern. So on the 2 hour time frame, we had a fair value gap here. This was the fair value gap. Now, based on my context and based on my research, I've realized that anytime we reject off 50% of a fair value gap, there is a 60% statistical edge that price is going to move in that direction. And sometimes within the 40% deficiency, price can always come to raid this high again or take out this invalidation. This is usually my invalidation, the candle that created the fair value gap. That's usually it. So the moment we had this rejection in the morning in London and then we started to move down, I just told myself I'm bearish. I'm looking for sells. And that's it. So this was the sell idea. The moment we rejected, and then look at the way we moved down to shift this structure. So that was why I posted it on my Telegram, free Telegram, that okay, what could happen is that price could retrace back into this range and we could have a sell to the downside. So that was it. There was nothing special about that trade. It's just based on my understanding of the market and based on previous patterns. So now about the trade setup, the moment we had price action all the way down here, this was the first trade I placed. I up here, and my stops was I up here at first. So that was what I was doing. And then price was in profit a bit and then came back out of profit, back to profit and all and all. And as you can see, this is the price action. And this price action was in London, 9 a.m. So there it is. But something again happened on 15 minutes time frame. Now, price is fractal. This is one of the things I communicate with my students a lot of time. Price is always fractal. So when I say price is fractal, what I mean is that what happened on 2 hours can repeat itself on lower time frame. So on 15 minutes, we have a fair value gap here. This is the fair value gap on 15 minutes. We have to be careful to use it perfectly. So now, if I draw the Fibonacci, I said Fibonacci. If I draw my two that cut it into two, this is my Gantt diagram, you will see that the 50% is high up there. That's the 50%. So what is my rule again? My rule is that if price can reject from the 50% of a fair value gap like that, especially in time, there is 60% statistical edge that trade is most likely going to be a winning trade. 60%, not 100%. So 60%. So rejecting from this mean threshold, I said mean threshold, sorry. Michael J. Anderson called it the consequent encroachment. That was what he termed it as. So that is the consequent encroachment. So having this rejection from this consequent encroachment to the downside here, I just knew it was most likely going to be a sell. And now remember I said price can always come and retest it as long as price doesn't invalidate the invalidation zone. So this is going to be our invalidation zone if we are going to be using the 15 minutes time frame. What I've shown you can be done on 1 minute. It's just that if you're going to do it on 1 minute, you have to be super fast. That's just it. You have to be super fast. So look at it here, the rejection there. Price came back. Now this is where I want us to add our session breaks. So this is the Asian session. This is our London. Now what do you see is happening in New York? Prior to New York, we are literally running that high, but we are still rejecting along the consequent encroachment of that our key level. So let's just stamp this as a liquidity run. I'm not going to be drawing down there, but just put it yourself. Do you understand now? If you watch some of the old videos I've made, there's something I talked about Q zones. I don't know if you guys remember, I told you about Q zones. I said prior to every session, if we can have liquidity run at certain time, it can actually show you that that liquidity run is actually sponsored by the institution. Now, just combine all that together with what we have within this fair value gap. So you can see the moment we had this candle running above this high, still rejecting from the consequent encroachment of that 15-minute fair value gap. The moment we see price coming all the way, this is now our break in market structure. Whatever you think at that moment doesn't matter. So all this was just a retest back into that neckline region here, this fair value gap or this other block. And now your stop loss can be high up here, but for me, I'll most likely put it at the invalidation zone. So you can see 90 pip stop loss on gold while we were just in New York start 1. So you can see the move started 2, and then boom to the downside. You have 3RR. Lock your profit at 3RR and let's see if price can keep moving. That was what I did. And then I was shocked when price started to do this. So I knew this key level after all is reacting eventually. So that was it. And then I already closed. I secured some profit at 3RR and then I had to close the rest somewhere there. Now sometimes if I'm lucky, I usually hold those trades over the night. Do you understand? So that is everything about the trade setup. So there's another trade setup I posted on my Signal room, or my free Telegram rather. And this is this sell. I believe this sell is most likely going to reach out for this low. That's just what I see. Could I be wrong? Yes, I could be wrong. So it all started from the 1 hour time frame. Look at the way we rejected from this consequent encroachment here. Can you see the way we rejected? That's perfect. That shows me that the institutions are active. Auction market theory, rejecting price shows you that it's progressive and we are most likely reaching out for something. So ever since then, I've been trying to find a way I can get an entry, but I couldn't. Although there was an entry I could have gotten here based on this other blog, but the fact that I wasn't really interested in that, basically. So I just left that alone. Now, the reason I wasn't interested in that is because I wasn't certain. There's a kind of price action I was looking for that did not happen. And the reason was because this was the first fair value gap I was looking at. So the moment we started to invalidate it, I was like, you know what? I'm sitting my ass out of this market. And then you can see how we started to retest that. And it's lovely. So what I'm doing is that I'm buying my time to wait for New York. I'm not in a hurry. That's just what I'm trying to say. The other reason why I didn't want to sell this was because there was a key level here that rejected price yesterday. And all this was looking like it was like a break in market structure and like price was going to move to the upside and then we can buy. So I said no. So right now, the moment we took it out, now I'm certain that we are now bearish. So now this is my entry. You can see the moment we rejected from this key zone, I just sold instantly. And it's moving nice. And then I posted it on my Signal room. Look at it here. This is the sell, the trade setup. And then I'm hoping that price comes all the way to this low. So guys, that'll be all. I hope you learned from this. Till next time, I wish you good luck and good trading. Stay safe.